Hello, Dr. Morris. This is a very short presentation of 7 slides that'll give an introduction to the STAR system and the work that we're doing with you on your qualified plan money and personal money. And again, this is the STAR strategy, which we call the RMD remedy, RMD standing for required minimum distributions. And the definition of remedy is the act of correcting an error or fault or evil, which I believe is true. But it's sequentially repositioning. That's not spending your money. We're sequentially repositioning, moving around a chessboard, if you will. And it's repositioning these qualified plan assets as well as into life insurance, as well as personal assets into a Roth. And the result is we're creating tax-free income for your lifetime, as well as tax-exempt assets for your children and your heirs. Know who we are. Here's a little background on a book I wrote called The Red Zone, and there are 3 companies that comprise all the work we do. And of course I have, as you know, a family practice, and over my right shoulder is my 52-year-old son-in-law Tim, who's an attorney and now president of the company, and over my left shoulder is Jody Daly, who's worked with me for 35 years, and my son Jamie, who's 40 years old and is the father of my 2 grandsons. But the STAR strategy is sequentially repositioning assets to tax-free using 3 steps. But let's talk about the taxable nature of assets. And bucket 1 is all that money you have personally, that's after-tax money that you've invested in stocks, bonds, mutual funds, and who knows what else. But that bucket is taxable in the sense that everything that it earns is taxable. All the dividends, capital gains, or interest that you earn shows up in your 1040 each year. And you cannot convert that money to Roth. But the earnings on that bucket, number 1, is taxable for the remainder of your life as long as that money's in that bucket. If we move to the center bucket, the tax-deferred bucket, that bucket is 100% taxable. Everything you put in and everything you earn will come out as ordinary income. And then there's the tax-free bucket that most people don't have any money in, which is comprised of assets that all the earnings, income, and inheritance are tax-free for life. And Dr. Morris, we're moving your assets to tax-free. So in the taxable bucket, we're focusing on a little over $402,000 of your taxable bucket that we're going to turn to tax-exempt. We're also focusing on $500,000 of the money that you have in pre-tax accounts, your current retirement account, and perhaps some IRAs. And we'll also turn that tax-exempt, so that it'll end up, both those 2 buckets of money will end up in the tax-free bucket, which is a euphemism for assets that are tax-exempt for life. And here's this 3-stage summary of what we're going to do. Now, focus in the middle there on stage 1, where we focus on the tax-deferred bucket. And what we're going to do is take that $500,000, and over 3 years, we'll put that into a specially designed life insurance contract. So at the end of 3 years, all $500,000 will be moved or washed into a life insurance contract. And once we've finished funding the life insurance contract with that $500,000, we will then remove that policy, and the Department of Labor has regulations on how we do that, but we remove that by sale. It's the only asset in a qualified plan you can do this with. And so we will sell that policy to either you or to a trust on your behalf. But if we sell something, we have to pay for it. So if we sell this policy to you personally, let's say, so you're going to own the policy personally, you have to pay for it. So we take, in step 2, we take the purchase price, which is a little over $400,000, and write a check or transfer assets into the retirement plan that are now back in tax jail in the tax-deferred bucket, but we've got the policy out. Once we've bought the policy out and we have those personal assets into the tax-exempt, tax-deferred bucket, we then move to step 3, where we convert that $400,000 into tax-free using a Roth strategy. So at the end of the day, over these 3 steps, we've moved $500,000 into a life insurance policy, which is now in the tax-free bucket. And we took a little over $400,000 of your personal money through the purchase arrangement and moved that into the tax-free bucket. So you now have 2 assets for the rest of your life that are income tax-free and estate tax-free. Now, there is a tax due at the time we convert that $400,000. So in a 30% bracket, let's say you owe $120,000 in tax. We pay that Roth tax, and you see the note in the red by a special loan provision from the life insurance, which you never pay back until passing. But here's the net result. All of these numbers on both the left side where we do the strategy and the right side where you don't, all the income, tax, and ending balances are calculated through age 100. So on the right-hand side, you'd have income until age 86, and at which time you've completely run out of both your retirement plan asset and your personal assets, and you have nothing left over. But during that time period from age 70 to 86, you have paid over $800,000 of tax on those two assets. Whereas on the left side, under the STAR program, which we call the STAR Gold, you would have income to age 100, and your income would not stop. You'd have every year from 70 to age 100, and you would have received $2.6 million in income, tax-free, and without ever running out of money, because even at age 100, you got $274,000, over $250,000 still left. And on the bottom number, over that time frame, with the STAR strategy, you've only paid $193,000 of tax. So your choice is to pay $800,000 of tax or about a little under $200,000 of tax through the STAR strategy. Now I'm also sending your accountant all the details on how we got to these numbers, so she can read through the actual proposal and answer any question. And here's our contact information. She can contact me, Jamie, or Tim, or Jody for that matter, on any of these phone numbers at any time, and we look forward to talking with her or perhaps making this presentation more formal. Thank you so much, and we look forward to seeing you soon and completing the STAR strategy.